So we're looking at August 2014. So, and we're looking at question 2. So August 2014, question 2. I'm just going to get it up on the screen here. So August 2014. No, if you look at that, like, we're not doing anything different to the previous question. On a whole, but anyway, like if we start off there, we're in 2013-14, like we have tangible assets, and there's a note, like that's our property, plant, and equipment. We have intangible assets. So that's what, remember I was saying that book, there could be impairment. That's your goodwill, intangible asset, but like your goodwill. Right, we have interest, we have trade receivables. Now interest receivable, that's the same as interest owed, like, but this time it's obviously owed to us, the company. Investments, that's short-term investments. Now that doesn't affect the actual cash flow, that goes into change in cash equivalents. Okay, so if you're writing next to that, maybe short-term investments. It's a side of current assets, so you'd expect to know that anyway. Anything current assets is only for a year. We have our cash. Looking through that then, we have our share capital, share premium, revaluation, so that will affect our property, plant, and equipment. Retained earnings, there's a note on that, that's our profit and loss account basically. We have a debenture and we've current liabilities. So if we look at the notes then, so note 1, assets with a net book value of 30,000 were sold for 16.5. The profit and loss arising was included in operating costs. So basically in our profit and loss account. So the net book value of 30, it was sold for 16.5. So there's no real work in there because we have a net book value. So obviously if it was worth 30, it's sold for 16.5, that's a loss, isn't it? What's that? A loss of 13.5, is it? 13.5 is a loss. Note 2 then, that was note 1. Oh yeah, note 3 then is to do with current liabilities. So they're just listing them. We've our trade payables. Yeah, I'd say note 2 is the income statement below. Somehow, let's see. We've trade payables, we've income tax, interest payable, and bank overdraft. So that means we have to do a tax account and interest account. And if we go down then, right, we're into our income statement. And so that's supposed to be note 2. Now, if you're ever given your income statement, right, you can always ignore the year before. So for income statements or profit and loss accounts, the current year you're looking at. So all we're looking at is 2014, right? You can ignore the other one. Now what we're going to be looking at with that is operating profit anyway is the first thing. That's given to us, isn't it? 44,500. Investment income, okay, we'll talk about that soon. There's an interest expense and we have taxation. Okay. And note 4, it says profit is after a depreciation charge of 25,000. Okay. So that's our depreciation. And then note 5, analysis of retained profit. Now what they're giving that for really is the last figure you'll see is the dividends paid. Now again you can ignore 2013, it's only 2014 is all we need. So prepare our cash flow statement. So like really there's no big difference in standard, there is. It's the same thing really. So again what we'll do is we'll launch into it, and as with the other one, we'll start off with the layout. A lazy job of copy and pasting. So we're doing Oracle this thing. sorry, no, it's okay, so we've pretty much the same layout as the previous question that we did there. So we're going to have operating profit. Depreciation expense. We said there was a loss on disposal. Okay, I'll just retake it down. So we're going to have inventories, we're going to have receivables, we're going to have payables. There's no accruals in this one, so I'll take that out. Now what we're going to have actually, is impairment of intangible asset. So that's the only extra thing that you would see in these questions compared to anything that we've done already. So operating profit, depreciation, loss and disposal, interest receivables, payables, impairment. We're going to have interest paid and tax paid, so that's the same. Okay. Now after that then, we're on to our investing activities. We're going to have additions, we're going to have proceeds. Anything else we've got? Again, just check for a grant, and again that would be under non-current liabilities, and there isn't any grant or anything. Outside of that, additions, proceeds, interest received, no. Well, I had three things there this time. Additions to property and equipment, proceeds from sale, and interest received. And what we're going to have then, we're going to have issue of shares, repayments, loan, and dividends paid. So to be honest, it's the same stuff every question. One or two things might vary. So really the hardest part of this question would be learning the layout. But the more questions you do, the easier it can get. Right. that alright? So we're going to go there. So we'll start off with the first start again. So we're starting off with our operating profit. Now if we look at the notes there, we're given our operating profit. So how much are we given? 44.5. Yeah, 44.5. Yeah, it's in there in our under note 3 in our income statement. So operating profit is 44,500. So that's our starting point. Are we given the depreciation? Yeah, 25 grand. Now loss on disposal, we said that already, didn't we? We said that if you go back to note 1, we're told the net book value of the property and equipment. Net book value was 30 and we said they sold it for 16.5. So that was a loss, we said, of 13,500. Again, there's only to show that as a working, like, just wasting time, so just take it straight out. Okay, so what we're looking at then is, we might just do the impairment there of intangible assets before we move on to the working capital movements. So if we look at intangible assets, and just think of it being as goodwill. So if you just compare year to year, it's gone downwards, isn't it? Our intangible assets in 2013 was 11,000, and 2014 was 6,000. So that's a difference of 5. So that's just, as I was saying, that's the same principles as depreciation. Otherwise, if you didn't write them off, you'd have them in your assets forever, like, you know. So there's a whole IAS 36 we'll be doing. It's all an impairment of assets. So we're looking at inventories, receivables, and payables. So if you look at inventories, has inventories gone up or down? Up. So it's an increase. So it's an increase of 10,000, is it? Yeah. Receivables. Sorry.
That's an increase.
It's a minus, isn't it? I was just checking there, see where you away. Receivables in upwards as well. Yeah. So it's a -2. And payables. Yeah. So that's gone. Oh, sorry, that's a note 3. It's gone up by 2,000. So that's, is that good or bad? Yeah. So +2. So we get those there. So this one, that. So that should come to 78,000, I think. Is that right? No, what we're looking at the next is our interest paid. Now, if we go to note 3 there on the current liabilities, we'll see inside there's interest payable. So obviously they must owe some interest. So that indicates that we must do a T account. So like we did there in the previous question, we're going to do a working for that. So we're going to have interest. No, it's exactly the same as our tax account because it's a liability. So put in your opening balance first. So the opening balance there for interest is 3,000. And our closing balance is 3,800. Right, that's all going from note 3. So again, like we did it for tax, look at your profit and loss account then. So inside our profit and loss account, just underneath our current liabilities there in the notes, you'll see interest expense. So how much is that for 2014? 2.5? Yeah? So we'll start that in. 2.5. So like the previous one then, what we're looking for is interest paid. So if we balance it off, over the debit side, we'll be getting an interest paid figure. So that's 55. Is that 17, is it? Is that right? Yeah. So 17 interest paid. No, while we're at it, we might as well look at tax account as well, because there's tax owing and it'll be the exact same layout. Okay, so if you look at our note 3 again, starting off, tax was 9,000 anyway. And at the end, tax was 10.5. That's coming from our current liabilities. And inside our profit and loss account, if you look there under our current liabilities in our note, second last figure for 2014, 6.5. So that comes to 15,500. 15,500. So if we balance that off, that's 5 grand, isn't it? Tax paid 5. Tax paid of 5. So what we'll do now is we'll slot those two figures up to our cash flow statement. So interest paid was 17. And tax paid was 5. So that's everything in our first section. So again, if we add that up. I think is in the old journal. Yep. Make cash off our rating is in the old journal. So the layout is the key thing, isn't it? Once you have the layout, you just go one by one, like you can't go around like. Right. So that gives us on to investing activities, and what we're looking at there is our assets. Now, is there anything that we can fill in straight away with additions, proceeds, interest received? Proceeds. Yeah. If we look at note 1, how much was our proceeds? Yeah, 16.5, wasn't it? Note 1, they were sold for 16.5. So that's money coming in, proceeds from sale of property and equipment. Now, interest received, we'll have to go working for, because if we look at current assets, we have interest receivable inside there. So there must be some working, they must still owe money. And the same with additions. Remember the previous question we did our take home for the property and equipment, same working required. So if we jump down to our workings, we'll do those. So what we'll do first, we'll do property, plant and equipment. So we'll probably have to put in your opening balance. So if you look in your statement of financial position, the first figure there, 2013, it was 400 started off. And by the end of it, then carried on, it was 435. So 400 and 435. Now, what else should we put in there? Disposal. Yeah. And we have, remember, net book value, we're given the net book value anyway. That was 30, wasn't it? 30. What else? Anything else on the credit side? What else would?
Expense.
Yeah, the expense, yeah, exactly. Depreciation expense. That was 25, wasn't it? It's inside there under note 4. Yeah, 25. And on the other side, we have one thing we can put in there. What would increase the value? Remember, we had one revaluation. Yeah. So if you look there under your equity and liabilities, how much is revaluation? So again, we're looking for the increase only. So it's gone from 8 up to 23, 15, isn't it? So 823 will be 15,000 of an increase. You all see that? Just there under shareholder equity. Yeah. Perfect. So what we do is we balance it off, and like the last one, we're looking for additions. So what we have is 30, 25, 45, 55. 490, is it? Let's go through. This question, all the figures are fairly even. 490 and we have 415 there, so that is with 75,000, is it? I think if you balance it off, it should be 75,000. How's that sound? No, the other work we said we want to do is interest receivable. Okay, so it's the same actually, the same as in property, plant and equipment, same rules like as an asset. So opening balance, debit, closing, credit. So if we go back to our current assets into interest receivable, starting off we had 800, and at the end we had 1200. So opening balance, closing balance. No, the other thing that we're going to have then is what's in our profit and loss account. So if we go to our profit and loss account, look at the note there, it's under investment income is what it is, because that's the way interest receivable there, isn't it? How much is that? 2-1? No, what side of our receivable, what would that come on? Debit. Yeah, because the money we're looking for how much we received, which is the credit. So inside here, the debit.
That's what you received, is it?
That's what you should have received, I suppose. And this income is 2,100. Over here, then, right? If we balance it off, what we're looking for is what was actually received, and that makes sense because think about your bank account again. If it was coming to your bank, it'd be on the debit, so we'd be crediting our interest receivable accounting. So that's the figure we're looking for if we balance it off, how much was actually received. So if we balance it off, that's 29. So here. So what we received is 1 7. So that's money coming in. So 1 7.
Interest to see the interest paid, I say.
Yeah, they actually. So if we let them go out, till cancel out.
In the exam, that'll make you think, I don't know.
75 and 1 7. So additions is a negative 75, and interest received a positive. I think that's 1700. So equals. So I think that gives us a negative net cash flow for best activities of 56,800. I think that's what it comes to. So negative 75, positive 16 and a half, and a positive
The
17.
take notes are handy if it's on, if what you're looking for is on the debit side, it's negative, and if it's on the credit side, it's positive.
Exactly. So I think what is it? It's 25 marks, right? That's 25% of your exam.
50 pounds.
That's nice, isn't it? It's a quarter way through it, like. This is a very question where you could get on very well. Because there's going to be no surprises, you know. Consolidation there could be surprises. But this one, it's set in stone. Right, last section is our financing activities. So we're looking for the shares. So if we go back to our statement of financial position, and if we look at our shareholders' equity, our share capital has gone up and our share premium has gone up. So our share capital has gone up there by 48 and our share premium has gone up by 16, is it? 16, 24, 24, yeah. So 24, 48.
You want to work out 80 cent shares or anything like that?
No, yeah. That's only if we're going to what's that?
It'd be only if you're looking for the number of shares.
Yeah, exactly. So if we have, if we work that out, so that's 48 and 24, 72. And that's positive rate of? Positive, yeah. 72. Now, repayment of the debenture. So you'll see there the debentures went from 50 down to 25. So that's a negative. And dividends paid, where do you find that? So if we look in our notes again. So that was the very, actually note 5, very last figure, dividends paid was 15. So again, if we work that out, equals, so it's a positive 32,000. So then again, what we're looking for, get your three totals together. $46,500. So 46,500. The increase of 46,500. No, actually, just looking at the solutions there, there's two more figures they want to put in, basically your opening, closing cash. Now, they might give a mark for it, so we just put it in just in case, right? So we have our increase, we know how much it is. What you're going to put in then is your opening balance of your cash and cash equivalents. So if we look at there, right? Sorry, no, I should have said this earlier. Opening balance of cash and cash equivalents. We'll put it in just in case anyway. So, and that will give us our closing balance. Cash and cash. So what was our opening balance of cash and cash equivalents? So if we go to our cash and side our current assets, there's, so yeah, the opening one, yeah, so last year's one basically. So we had 3,000 in cash, but if we go over to note 3, look at our current liabilities, what have we inside there? Bank overdraft? Like what, I suppose what might be handy for this is, right, we need to put those figures in obviously, but if we do the changes first, does that make sense? We'll have all the figures there in front of us. Might be a bit easier to do it that way. So what we'll do is we'll make up the changes in cash and cash equivalents, and then we can put in those two figures that we need. So changes in cash and cash equivalents. So 2013, 2014, and then cash, bank overdraft, and also short-term investments. Right. So, with cash, starting off, cash was 3,000, and at the end of it, it was 5, so that's a change of 2. Bank overdraft then was 98,800 starting off. 98,800. And it's gone down to 70. So that's a change of positive, what's that?
28, right.
28,400. Perfect. Short-term investments then, was there anything started off in 2013? No. 2014? 16. So that's an increase of 16.
What's that, 16?
That's
Oh,
positive.
yeah, it's investment.
It's investments, yeah. So that could be just a short-term deposit account or something. Right, so what I advise and what we do is we total each column, right? 2013, 14, because we'll be using those figures at the end of the cash flow statement.
You're including the two zero and three.
That would be, it doesn't seem to add up, right? So we've negative 95,800 at the end of 2013, right? Or 2014, 49,300. So overall, the change was a positive 46,500. Does that match up to what we had already? 46,500, and if you go up to our cash flow statement,
Yeah.
46,500. Now, all we must do is literally, just for completeness, we need to put in, see these two figures here, our opening cash for 2013 and 2014, we need to put those into our cash flow statement above. So, just to show it in, so if we jump up, opening balance of cash and cash equivalents. Basically, right, figures here will be what we had starting here in 2000, I think 2013 was 95,800. 5,800 negative. And if you work that out then basically, right, you know if you're right or wrong again because you've positive 46.5, negative 95.8, that will give us 49 as our closing balance. 49. Okay, so literally at the end of it we have our, it's basically the same as our cash and cash equivalents. Increase your opening and your closing. So like that's a full 25 mark, so
The last bit there as well.
I'd say it's in the solutions So I suppose just for completeness, I don't think they did that, the marks we put it in, but just in case.
It's just giving your actual
Oh.
cash equivalents. Like,
That's it,
the
yeah.
other one is your increase, but it doesn't actually give you your actual.
Yeah, exactly. So just show that, and we'll do it again the next one. So I'll just say that I know that was from August 2014. No, it didn't come last summer. That was last August, okay? So, May 2014, it didn't come up.
You know, then something bad or that way. If it's something
Yeah,
that's bad, it'll come up again.
Yeah, that's why I'm hoping to get an examiner's report, you know, see what's actually the results of it. Right. So when we look at the SMA 14, August 13 is what we're looking at. So August 2013, question 1. No, the layout looks different, doesn't it? It's actually the same thing, it's just there's a lot of space given to the figures. Again, no, you see in the first section, the profit and loss account, they give us 2012 to 2013. Ignore 2012 for profit and loss, just the current year is all we need. So again, we're given our statement of changes in equity this time. Okay, it's grand. The only reason they give you statement of changes in equity is for your dividends. So you'll see down here at the end of it, dividends paid for the year was 85,000, right? So that's all you need that for, nothing else really. You can get your issue of shares if you want to. You can get that from your statement of financial position. So then we're given our balance sheet, which is our statement of financial position. Okay. Now if we look at it there, right, there's nothing different really. The only thing is, you'll see we're given our depreciation. So if we were doing a working for property and equipment, we do a separate depreciation account. If you're given separate figures, do separate accounts. Okay. Our current assets, inventories, receivables and cash, there's nothing different there. Our shares retained profit, debentures, payables, tax owing and bank overdraft. So we've tax owing, so that means we do a tax account. We're actually given no notes, we're not. So starting with the profit before tax, set out the cash flow statement, 17 marks. And set out the statement of cash and cash equivalents, 3 marks. So that's 20 marks for that. Oh yeah, question 3 is 35 and question 2 is 25.
So maybe because there's no notes.
Maybe there's no notes yet, exactly. Yeah, because the other one, the other one was 25, wasn't it? The previous one we did.
There might be more workings or something.
Might be more workings. There's very little workings in that one actually.
Like one like that. So.
Yeah. No, looking through the exam papers, that's the way sometimes it's come up. It's 2012. It didn't come either. I was wrong there. So they come twice. No, what happened to it? I was finding out has the syllabus changed because it doesn't. Because I was looking at next year's accounting and it's not on that. Because I was thinking 2011 and 12 was it on that syllabus? You know, they changed it around if it wasn't. So I need to find out why it's on it. No, it's good that it's on it because it's a nice question. Like so. It hasn't come up in summary, obviously. It's come from the 2 August papers. So.
Do these in August.
Right, we'll turn to there. We'll get through it. This one will be easy. I tell you, the only work we probably have to do is tax. So, main periods. Now we're not giving any notes on disposals or anything. So, we'll assume if there was a disposal, we'll be given a note, so we can leave that out this time. So literally, we'll have operating profit, depreciation, we'll have receivables and payables. Interest paid, tax paid, additions, proceeds, interest received, there's none.
See the difference in warehouse, is that cost?
Things to bought, I suppose, is it?
So would that be an addition?
An addition then of 300. Yeah.
You just take it straight out of that?
Take it straight out. They're not working. So I'd say they're actually, the only working really is tax. Yeah. So I suppose that's why there's it's like 17 marks for the cash flow, so that's how many, that's 8 marks less than the last one, so it's very, very straightforward. We're all complaining about that. Issue shares, we're going to have that. There's no proceeds from the sale because we didn't sell anything. We have issue shares, alright. The debenture. There's dividends. Okay, so it's short enough. Right. So we'll start off again at the start of our operating profit. So operating profit. So starting off there, what's our operating profit this time? 80, is it? Wrong question. This is always 13, is it?
Words.
So, yeah, operating profit, 90. Okay. Now, depreciation expense. Now, are we told depreciation expense anywhere? No. No, we're not given a note on it, and just remember there was no additions, or sorry, there was no disposals. So if that's the case, you can go, if you go to your accumulated depreciation figure, which we're given under warehouses, you'll see depreciation has gone from 24 up to 60, isn't it? So what you have to assume there is the increase is your expense. So 24 plus 60 would be 36, is it? Yeah. So if there's no additions, if there's no disposals, you can just take the figure straight from there. So 36 would be that. Okay? Inventories, has inventories gone up or down? Up? Yeah, up by 12. So it's a negative. Profit. Receivables. So that's gone up by 6. Profit. Payables. Down by 5. So that's a negative. That means you've paid off your bills. 5. Profit. So it's 103, I think. Now what we're going to have then is interest paid and tax paid. Now again, just check current liabilities. What have we owed inside there? Tax. So we do a tax account. Interest, there's no interest owing, so what you can do is go to your profit and loss account, and if you look in there, how much is our loan interest? 5. Yeah, 5 grand. Okay, so just put that straight in. And what we do is, if you want to just do a T account there for tax. So, starting off, how much is our tax in our current liabilities? 6. Balance carried down. 27. And if you look at our profit and loss account, our tax was last year 10,625. So if we balance it off, it comes to 16,65. So the tax paid is 1665 is 2,700. 13,925. Our tax paid here. So let's let that off there. So we work that out, we fit in that 13,925, so net cash flow from operating activities is 84,075. Okay. Next thing is our additions. Now we said we're not giving any notes at all on property and equipment, so all you can do is just take a difference. So if you look at your warehouse has gone from 1.2 million up to 1.5 million, so that's an increase of 300. So it's obviously a slight negative. So, net cash flow from investing activities, -300. Perfect. Issue of shares. So there's no share premium this time. All you see there is our share capital is at 800 up to 850. So that's an increase of 50,000. And you'll see the venture has gone downwards. It's gone from 120 down to 100. So that's a negative 20. And dividends paid in is the last thing. So if we look at our profit and loss account, or sorry, statement change and increase at the in there of page 2, very last figure, under retained profits, dividends paid in the year was 85. Perfect. So with those. So it leaves us with negative 55. So again, we'll see if we increase or decrease. So this time it's a decrease of 270,925. That's due to the assets decrease in cash equivalents of 270,925. Now, as we were saying there the last time, what we'll do is next we'll do the changes in cash and cash equivalents. So this part, yeah, exactly. Just always given they're given my marks for 3, yeah. So the statement of cash and cash equivalents. That's what we mean. So we've cash and anything inside the current assets, and inside the current liabilities we have bank overdraft. So 2012 we had 900 in cash, 2013 we had 800 in cash. Is that right? 900 and 800. And inside the bank overdraft we had 223 150. Two, 223 150, and in 2013 and negative 439 975. Right, so obviously there are big outflows. So our cash has gone from 900 down to 800. That's a negative 100. And our bank overdraft 223 150 up to 439 975. So that's gone up there to 663 125.
26825.
216825. Is it?
Figure
493, is it? Oh yeah, 439. Yeah, sorry, repeat it. 493. So 493 975 223 150. So that's 270,825. That's right. 270,825. So that's how much our bank overdraft has gone up by. So again, like we did in the previous one there, we're going to total those up. So starting off 2012 we had a negative 222,250. 2013 we had negative, so overall 279,255. So that matches up to what we had up here, doesn't it? The figures. So like we did in the previous one there, just put in your opening and closing balance up there as well, just to fill it in. So how does all that sound? It's not too bad, isn't it? So what I'll do is I'll print off some more CPA questions just for practice, but they're all, once we do one of those, they're all exactly the same, you know. So what that leaves now, that's our first topic covered. Is that, are we happy enough?
How many copies were it?
6 or 7. Like what we have is, it comes out there, right? We have ratios, cash flow statements, consolidation, partnerships. Consolidation goes with profit and loss, they all go together, so that's sort of 2 topics in one. And then journals, which is all your IASs. So six topics. So what we'll do next Monday night is partnerships. Okay, with nothing new there. And then the week after that we do ratios. So then we will have 3 topics on there in a row that you would have done previously that we had those covered. And then what's left then is we'll have plenty of time to do the stuff then.
Oh yeah, we're
The
here.
ratios come here for you.
Ratios seems to come a lot, yeah. Yeah,
How
so
will you email us those Excel sheets?
I will.